Hello traders, it's Sunday night, October 10th. I'm doing some research. I thought I'd share my results, take a look at the market, take a look at our last trade that I put out Thursday morning before the opening bell. I told you I like AFRM. If we take a look at the 5-minute chart, you can see, actually we're going to the 15-minute chart. You can see this was the opening price on Thursday. $131 was that opening price. Stock closed at $141, $10 gain in 2 days since that video. Not too shabby, and it's because we trade relative strength. The stock is strong relative to the market. The market has not gone anywhere in the last 2 days. The stock wants to go. I still like the stock. Let's see what else we can find, but first we have to get our market bearing. So let's take a look at the S&P 500. I don't think we're going to go anywhere fast on the S&P 500 because look at these days and look at the price action that we've had in the last week. You get this gap down, big sell-off, nada the rest of the day. Big gap up, all the move in the first hour, compression the rest of the day. Big moves too. Monday and Tuesday, big moves. Here we go again. Big gap down, compression. Can't take it lower, we leak a little bit higher. Now we get this nice big gap up, and then eventually that fails. Friday we come in and we're drifting lower for most of the day, and we start filling in a little bit of this gap. In total, the market is not going anywhere. Now, this is a little bit bearish to me because this is the heaviest selling pressure that we've seen in the last year. Typically, on the type of strength that we've seen, if you zoomed out to a weekly chart and you took a look at how strong the market's been over the course of the last couple of years, look at that strength. Every single dip has been bought, aggressively bought. Not this one. This one's starting to take hold a little bit. So we've got to be careful with this. And whenever we've had these drops, you would expect that you're going to test the low. No problem with that, especially after heavy selling like that. We get the bounce. We had the bear flag formation and the sell off. Okay. Asset managers, if you look at that weekly chart, they have got to be gnawing at the bit to start buying so that they can get ahead of a year end rally. Well, all of that buying pressure, especially after test, bounce, retest, 1, 2, 3, 4, 5 days down on that 428 level on SPY, this should start getting buyers super, super excited. So we get this nice pop up, cleared the 100-day moving average. Oh, yeah. Ran all the way through this downward sloping trend line. Here we go. Should get another big day on Friday. Not so. In fact, this day closes as a bearish hammer. Friday started to fill in some of that gap. This is not the formation that bulls wanted to see. They wanted to see us go off to the races so that we could challenge the high. That's simply not in the cards right now. But by the same means, there is firm support down here at 428, 429. So we've got two opposing forces, and we have a market that could break out huge either way. We could get that big rally up and that breakout through that downward sloping trend line. We also could have a fail of the 100-day moving average. And if that happens now and it takes out this support level, we could get legs down to the 200-day moving average. Whoa, 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 whoa. Why would you say that, Pete? I mean, look at this. We got 6 lines of support right here at 429. Those buyers are going to defend 429. How is it possible that we get down here? If we start to see selling pressure and the sellers overpower the buyers, these people who bought right here are going to be covering and they are going to get flushed out. When they exit their positions, that's the extra fuel that you have, whoosh, to test that 200-day moving average. I can't emphasize this enough. I don't know where the market is going to go, so I am not swing trading. You should not swing trade. You should day trade. If you day trade, you can stay very flexible. You can roll with the punches. If we take out this support level, you'll know to be on the short side. We take out this resistance level, you'll know to be on the long side. Day trade until we have that information. So let's take a look at stocks that would work for us on the bullish side and on the bearish side. So I'm going to go into my bullish search first, and I'm going to go into my day trading searches, and we'll look at red hot, and I will look at COP. And I'm going to put up my 1OSI indicator, orange line above 0 equals strength. Let's also put up the S&P 500 so that you can follow along. Take a look at the daily chart on the stock. You can see beautiful breakout here through horizontal resistance. Again, the gray line is the S&P 500. You can see how the stock broke through, and now we're getting some long green candles stacked. Pete, you don't know which way the market's going, and you're telling me I should buy COP after it's made this kind of run? I'm not saying come in Monday morning and buy COP. No, you need to wait for your moments. COP is a stock that should hold up very, very well. It's in the energy sector, which, by the way, little bit of economic news. We had the unemployment report on Friday, 194,000 new jobs created. Should have been 500,000. Not a good number. There's a wage component within it that showed a 6% increase, 0.6% increase in hourly wages. That is a hot number. That is the largest input cost for companies that is going to impact profit margins. The second highest input cost is fuel cost, oil cost. Oil costs are very, very high. China is rationing electricity. They don't have enough oil. They don't have enough coal. India's got a 3-day supply of coal reserves. You have 40% reduction domestically in the US for coal. Power plants here are trying to get as much coal as they can. You cannot just turn those supplies on like a light switch. So it takes a long time once you've capped an oil well to get it producing again. Once you've decided not to produce coal, it takes a long time to get that production back online. So this is a global problem. Is it transitory? Will it be over soon? I think that the energy situation is going to last at least 6 months. That puts upward pressure on prices. It puts upward pressure on inflation, which is not bad if it is accompanied by global economic growth, because it's the global economic growth that's fueling these commodity prices. That is not the case, however. This is a supply issue. And if I take a look at the economic activity, it's not that strong. China's official PMIs finished in contraction territory last month. So not good news. We're not getting employment data. China's not doing that well. We've got inflation coming into play. That's going to put upward pressure on interest rates. We've got the FOMC meeting on November 2nd. They're probably going to outline tapering. They may even start tapering in November. These are all market tailwinds. Incidentally, earnings season starting this week. Bank dominated. Higher interest rates should be good for banks initially, so I think the reaction will be fairly favorable because of the future potential for banks. But let's take a look at TLT. That's the US 20-year Treasury. Look at that breakdown. You've got a breakdown below the 100-day and the 200-day moving average, as well as a breakdown through this horizontal support. Interest rates are heading higher. That is going to provide a stiff headwind for the market, and you can see how this horizontal support level was also broken. Market did not like that hourly wage component on Friday, and that is something that I have been watching very carefully. S&P futures, by the way, are down 12 points overnight. Let me check on those real quick to see where they are. Aha, S&P futures are down 23 points. So let's go back to COP and my comment about, Pete, am I supposed to buy this stock on the open Monday? Not with the S&P futures down 23 points, you shouldn't. But here's what you should do: is you should wait patiently for signs that the market is finding support. Again, the gray line is the market. So on Friday, you got a market that's selling off. But look, market sells off here. Oh, market sold off hard. Stock continued to tick higher. Relative strength. Later in the day, you get double bottom, higher low in the market. Oh, this might be a pretty good area to nibble in. You buy COP when you see that type of market support and you know that the stock has relative strength to the market. Tick, 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 tick. Thank you very much. Wait for your opportunities. If we start to sell off hard on Monday, That means you don't even touch COP until you are certain that the market has found support. That's how we trade. Let's take a look at a bearish trade. See what we could set you up with there. Going to go into my ice cold search. Going to go to CRSP. Similar situation here where you've got a daily chart that shows relative weakness. Orange line below zero. Stock is weak relative to the market. Big volume. I like it. That tells me that the stock is selling off on heavy volume. Here's the tell for me. Big red candle down through the support level here. You can see how it's below all the major moving averages. Very steady downward sloping trend line. After a red candle like that, you are usually going to see some retracement. Shorts will take profits and they'll drive it higher. And you may at times see buyers who are willing to take a chance and see if they can get something going, a reversal off of this. When you have a market that is moving higher, typically the stock is going to at least release a little bit after a sell-off like that. It's going to have some buying pressure, but no, all of these losses from that red candle are preserved. Doji, doji, doji. Market moving higher, blam, another red candle. This stock is weak relative to the market. So, Pete, do I come in and short this Monday morning because the market's down 23 points? No. You watch the stock, you watch for an opportunity. If the market sells off hard Monday morning and you get a market bounce, you're going to be waiting for an opportunity to short the stock if it is weak relative to the market. So that's what you're going to be looking for, is that relative weakness. Let's go back a few days here and take a look at the price action in it, and I'll show you the tell in a stock like this. And this, nice opening. Stock had a really nice opening. You can see how it gapped higher with the market. But then the market starts to hit some resistance, and you can see how the stock is gradually starting to give back some of its gains right in here. Well, the market is up, 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 and the stock continues to drift lower. That is a sign of relative weakness. I'll go back just a little bit further here as well. There's another case right in here where you have a big market rally. What does the stock do? Cannot participate in that rally at all. Couldn't get off the deck. In fact, look at that close. Look at that strong close in here. Stock finishes almost on its low of the day. That's the type of price action that you want to be looking for. There are lots of searches that we can be looking at. I like those two stocks, though. I think they'll probably work out well for you. And I'm not going to go through the list too much. Facebook has been on my list of shorts as well. And you can see here's another one where the stock cannot get off the deck. Look at that market rally that we had the last few days. Facebook could not recover even a long red candle in there. How do I trade that? Click GTC, click that candle, upward sloping trend line. I'll be watching that come Monday morning. Click there, horizontal trend line, alert line, excuse me. If Facebook violates either of these two, I'm going to know about it and I may short it. Good luck with your trades. Stay fluid, stay short term. The market could break out in either direction. I like COP on the long side. I like CRSP on the short side. Pick your points very carefully. Thank you for watching. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.